Don't place a trade based on what you're seeing in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Hey traders, so gap filled. I did a video yesterday saying that there's probably a good chance over the next 1 to 2 days that the gap is likely to be filled. And that's exactly what has happened. And that's exactly what I'm going to talk about in this video. And also, what's going on behind the scenes in the bigger picture. I've got a really awesome pattern that I want to share with you on the weekly chart that may be signaling, it's a really, maybe signaling a top, but it may be also just getting ready for a big blow off to the upside as well too. So I'm going to talk about that in just a second. Guys, I'm also running a 85% off sale to my entire Master Trader Lab. If you want to get all the details to the 85% off, I'm running it today. Then you can go to johnsflashsale.com or click on the very first link in the description below, johnsflashsale.com. Go over there, you can see right now, I'm running an 85% off sale to my entire Master Trader Lab. There's something like 6 or 7 different trading courses in there. You're going to absolutely love it. Anyway, let's get straight into the markets today. And I want to share something with you because it's really interesting here. And I know a lot of people, when they saw the Dow Jones and the S&P start to sell off quite strongly through here, they were freaking out. They're like, oh my goodness, I missed out on the drop. The drop is starting. I've got to get in now and all this sort of stuff, right? So that's exactly what they say. It's exactly what they're thinking, you know, and that's their thought processes. But I came out yesterday and say, you know what, we've got this reversal here. There's a gap here. It's probably likely to get filled over the next 1 to 2 days. Now, look what happened today. Pretty much gap filled day one. Now this is the short term here, okay? In a minute, I'm going to share that big picture with you, okay? But I'm just sharing with you right now what the short term picture is, and then I'm going to take long term stuff. So we can see the gap filled right now, okay? So the market came down to the support level, right on this support line here, low, higher low. This still could be some sort of higher low right now, so it'd be really interesting to see. So if we go through that, if we go look at the S&P 500. And let's see what happened there. Actually, more than gap filled, right? Like bam, bam, more than gap filled. Came all the way down to support level. Big reversal candle as well too. If we look at the SPY as well too, there's a actually, was it the SP? There we go there. All right, SPY, same sort of thing, right? More than gap filled. I can actually completely retrace. So the question is, what's next for the market? Actually, you know what, let me go quickly look at the Nasdaq. Same sort of thing, right? If we look at the Nasdaq, we can actually see what? This thing here. And we can see that this is the support line through here. So that the Nasdaq, right, which is probably that line through there, is still below this whole level through here. Actually, maybe even down through there somewhere. We could actually call that that level through there, right? So somewhere through there. So you can see how we're still below this level through here. So if we continue up on the Nasdaq, then this still could be some sort of false breakout. Now, guys, one thing I do know is by looking at these short-term pictures here, is I do know in the big picture scheme of things, we know that we're not that long away from the next downturn. Okay, call it bear market, call it recession, call it crash, call it whatever you want to call it. We know we are not that far away. Whether it's 6 months, whether it's 1 year, whether it's within the next 2 years, we know we're going to start that recession, right? And that's where, like, I believe we're forming that sort of right now with all this volatility. We generally get a lot of volatility forms at tops and bottoms of markets. And so it's really interesting to see what's going on right now with the Nasdaq. If I go have a look at the other indices, such as the Russell 3000, we can see it's sort of the same thing, right? Bit of a gap filled. The transportation average has still got a little bit of a gap, so I probably see like a little bit of a bounce through here. But the transportation average on the bigger picture is actually a lot weaker. You can see, look at this here, support, ran down to support, ran, hit resistance, ran down, hit support, ran up, hit resistance, now hit support. Really interesting here is we've got a definite defined channel. So whenever you see a definite defined channel through here, depending on where it breaks, if we break down, then how you measure this is called a channel here, and how you measure it's called a channel projected target, where you measure from the high of the channel, then you measure from the low of the channel, and you project that down right through there, and then that would be the target. Now, isn't that just a coincidence that the exact target is the exact major support level through here? There's no coincidence in the market. So that's telling us that if the transport does start to break past 175, then we have a very good chance of it heading all the way down to 155. That may take a week. That may take 2 or 3 weeks. Okay, so that's what we're looking at through there. And then also the Russell 2000 is doing the exact same thing as the transports is doing. So we have the major low down through here. So what do? We measure from the high. We measure from the low down to the support levels right there. We measure from the low there to there, and we project that down. Okay, project that down. And then this is where it has a very high probability. If we start to break down out of the Russell through here, and especially if we start to get a bit of sideways movement, which I really want, by the way, if I want to trade this ETF with the Russell 2000, what I want to see is this. For me personally, I want to see something like this. I want to see this. I want to see some just some sideways movement for a while. Not much going, and then a breakout bar with big volume. That'll tell me we're now likely to head down to this 130 level, which is not, once again, not a coincidence, right? You can see how we actually found a little bit of rejection through there, and it's probably likely to overshoot and then probably head back down to 125. So, guys, I'm not saying it's going to break to the downside, okay? I don't know, but if it does break to the downside, that tells me if we break past 145, then it's probably heading back down to 130, okay? Right now, no idea no idea. Right now, there's pretty much no one in control of this. But when we break, when we break on the Russell 2000, because we have been going sideways for quite some time, it's building up a lot of energy here. And with this energy, when the break does happen, then it's like releasing energy, right? Sideways movement means energy building, not much going on. It's building energy. And then suddenly when it breaks out, depending on the breakout, but then the breakout's likely to be strong. Now, strong simply means that we're now likely to make a nice move. Not every single day, like bam, 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 down. Now, that can happen, but it's likely to make a nice directional move. Something like back here, right? You can see how you got a lot of small bars, but the overall picture was nice vertical to the upside. And this is actually, with my private clients and with my trading strategy, understanding this one concept of the markets of sideways equals energy building, and then when it breaks, it equals a nice directional move most of the time. That's why it's so important for me, and something I really, really, really continue to talk about within my trading strategy and to my private clients, because my private clients know how important that is. That sideways movement and then getting ready for another move is so, so, so important. Guys, if you'd like to get access to my private coaching, my private weekly coaching, it starts straight away and ends at the end of next year. I've just had one spot open for a 75% off. If you'd like to get access to that one spot only, then email me at Howell, HOWELL, trader@gmail.com, and I'll send you all the details. So one thing I want to share with you guys moving forward on is that bigger picture. I was talking a minute ago before about there's a bigger picture here, and I want to share something we use the Dow Jones here for a minute, okay? So with the Dow Jones, one thing I'm noticing here, right? So we have this top up here. Let me delete this here, and let me just delete this line through here, okay? So we have this sort of double top formation through here, and someone said to me in yesterday's video, John, double top, that means the market's gonna die. And the market goes up for 2 days. It's interesting, isn't it? Like when the market goes down for 2 days, everyone thinks the market's gonna go down, continuously. When the market goes up for a few days, same sort of thing. One thing I'm looking at here is that you will notice in bull and bear markets, right, we get some really nice sort of movement out of this here, right? So we have this nice move up, and then what we do is we generally get a bit of a sideways movement, or we get a bit of a pullback, right? And then we have a nice move up, and then we get a bit of a pullback, and then we get a nice move up, okay? So that's generally what happens with the markets. But one thing I've noticed about trends and the momentum of trends is that they start to slow a little bit. And that slowing, it has like a bit of a rounding top to it, and that actually could spell I was going about to say that could spell danger for the markets, right? But I gotta be very careful what I say. Guys, I don't know, this pattern here is not a breakout pattern. It's not a bearish or bullish pattern. But what I am saying is that if you look at this market through here, notice how we ran up, then we had a little pullback, and we ran up, then we had a little pullback, and then we ran up, and then we're having a little pullback. Notice how it's just sort of rounding. If I do like a little bit of a, notice how we're just sort of rounding through here. See, if you see like this, see how it's rounding, right? That is the momentum in this. Oh, now this is the weekly chart, by the way, guys. This weekly chart is round. It's like a rounding formation. And the thing about this rounding formation is that because it's rounding, we have, see down the bottom here, this is called white space here. And that white space, if we start to break below that line through there, we could see a sharp drop down. Now, not in one day. People think, oh, John, one sharp drop one day. It's like, maybe it may happen like that, right? But with everything I just said there, guys, we can see how, once again, we can see how this overall is stair stepping up. But notice how when it stair steps, we have a low, we have a high low, and then it runs up, and it just runs above the high, and then we pull back, right? And then we have another high low, and then it struggles to even make a new high, and then it pulls back. In a good bull market, what is a good bull market? The good bull market is market runs up, then it pulls back, and then it breaks up new highs, it keeps going, and it comes back. But if we start to do this sort of action, do you see the differences through there? See how this is strong, and then this is like, oh, this is rounding. It's getting very, very weak here. Now, what could be forming here as well too? So it's sort of a double-edged sword. Either way, when it breaks, we're going to make a nice move. So this could be part of some sort of ascending triangle pattern. Let me bring up the candlestick chart for you here for a moment. All right, so this could be some sort of what? Ascending triangle pattern. Look at this here. Notice how we have a high, low, high, low, high, low. Then we have this resistance here, right? So this could be squeezing into some sort of ascending triangle pattern. And then if that is the ascending triangle pattern, and then we break, guess what? That's then the 29,000 target, the 29,000 target. That's when it's likely to hit. But we need the break first, okay, guys? I'm not saying we're definitely going to 29,000. I have no idea. I'm saying if we form into this triangle pattern and if we break this level through here, then that's the confirmation to say we're on the 29,000, okay? Not straight away, but that's what I'm saying here. But on the flip side, if this thing starts to like falter through here and we don't do much, and then we start to get a breakdown like that, oh my goodness, that's when we can see a 22,000 hour target pretty much on a high probability basis, right? Why? Because we have this rounding top. Is it a rounding top, or is it an ascending triangle pattern? We don't know. The market will tell us. If we get something like this, then the rounding top and a little bit of a lower high breaking past previous lows, especially if we get that, then guess what? That's when we're likely to see a strong sell-off. If we're going to see a strong sell-off, we're likely to see that. Just like we did back here, right? Low, low, lower high, breaking past previous lows, then we got the strong sell-off. Low, lower high, breaking past previous lows, that's when we're likely to see the strong sell-off. Make sense, guys? So that's what we're looking at here right now. This is the overall big picture here once again. This is the weekly chart here once again, guys. And as you can see, it's forming through there. We can see what's happening through here. But then when we go back to that daily chart, squeeze it right back up. Let's squeeze this back up. We can see what's going on through here. So this could be either way, guys. When it breaks out of this here, we're likely to make a strong move in either direction. If this forms into some sort of lower high and then breaks past 26, or maybe even just a bit lower than 26, and especially if that happens on high volume, then we're pretty much likely to head back down towards this 22,000 level, and that's probably likely to happen pretty quickly, maybe in a week or two. If we do hold this and this forms into an ascending triangle pattern, then I have. What is that? All right. Then I have a projection target, and then the projection target would be, I would measure from the high of this resistance level. If this is an ascending triangle pattern, you measure from, what you do with these ascending triangle patterns is that you measure from the first point of the resistance within the triangle pattern. You bring that down, you project that out through there, and that's where then it's likely to hit, right? So that 29,000 level there, probably even that middle point there. So it's probably like 29 to 30,000. But again, conservative projection would be a 29,000 Dow. A conservative projection would be a 29,000 Dow. So that's what I'm seeing through there, guys. So there we go, guys. So the short-term picture, yesterday I said we're now likely to get a gap fill. I even titled the video because some people just see the title, they go, oh my goodness, I know what he's talking about. So I even titled the video saying gap fill coming, and actually I said 1 to 2 days. That actually happened today. So what's next? We don't know. Depending on what happens, if we create that lower high, then we can see a strong sell-off. If this forms into an ascending or triangle pattern, then we're likely to see a nice rising in the markets. I hope this makes sense, guys. Leave a comment below and let me know what you think. Do you think that this is a rounding top and we're likely to see that strong sell-off? Or either, do you think we're likely to break, this is going to be an ascending triangle pattern, and we're going to break it and we're going to see a 29,000? I don't know, but I'm really open discussion and your opinions on what is likely to happen. Leave a comment below